Ready to start your ESG journey? Get going today with SocialSuite, and you could start reporting publicly in 30 days. With investor pressure mounting and regulations just around the corner, there's never been a better time to start your ESG reporting. SocialSuite takes the complexity out of environmental, social, and governance reporting. SocialSuite helps organizations to measure, monitor, and report on their progress with fast, simple, and affordable software. Create value through ESG in order to raise capital, improve brand and reputation, as well as mitigate risk. SocialSuite has helped almost 100 micro to small cap companies report on ESG, with some starting their baseline report in under 60 minutes and reporting publicly within 30 days. ESG is a lot easier than you think, and you're probably already doing it. So take your sustainability reporting to the next level with measurable progress. Start your ESG journey today with SocialSuite, an ESG software company for micro to small caps. Visit socialsuitehq.com. That's social, SUITEHQ.com to learn more. This podcast is for informational purposes only and is not provided as financial, legal, or any other advice. The information is not investment advice or an offer to buy or sell any securities or make any investment. The views expressed by guest speakers are their own, and any reference to third-party products, services, or information does not constitute an endorsement thereof by SNN or its affiliates. SNN expressly disclaims all liability for any individual's use of the information presented in this podcast. My guest on the show today is Ryan Hamlin, co-founder and CEO of POSaBIT Systems Corporation. It's a publicly traded company. The symbol is PBIT on the CSE and POSAF on the OTCQX. POSaBIT is a financial technology company that delivers payment processing and point-of-sale systems for cash-only businesses. POSaBIT specializes in resolving pain points for complex, high-risk emerging industries like cannabis, with an all-in-one solution that is compliant, user-friendly, and utilizes top-of-the-line hardware. Let's start by saying that the cannabis industry has been getting, for lack of a better term, wrecked in the last 2 years. Almost every sector and indicator and publicly traded cannabis company issuer performances are down. Even when we think that some companies are making progress, they've probably announced not so great earnings within the last quarter or two. Despite the nuclear winter we're seeing in cannabis right now, and for the last couple of years now, if we're looking at the big picture, whether cannabis is legalized or not, it's without a doubt not going anywhere. I think we can all agree with that premise. And if so, I wanted to have on a picks and shovels type company to better understand how they're working through the current cannabis climate, as well as their perspective on the industry as a whole. That's where today's guest, Ryan Hamlin from POSaBIT, enters the chat. We had a great conversation about what's happening in the cannabis industry, as well as the legalization debate within the industry, the importance of having a payments infrastructure as a cannabis retailer, POSaBIT's capital allocation strategy, specifically in regards to M&A, and Ryan's vision for the company in 3 to 5 years. With that, please enjoy my conversation with Ryan Hamlin, co-founder and CEO of POSaBIT Systems Corporation. Ryan, thank you for joining me today. How are you doing?
I'm doing great, man. Thanks for hosting. Appreciate it.
Absolutely. Look, I was joking with you offline how I've been hounding James from Hayden IR to get you on the show, and because look, I've known POSaBIT for a while. Like I've seen you present a little bit. I actually had one of your board of directors randomly on Planet MicroCap podcast, Louis Cami, to talk not about POSaBIT, but talk about SPACs of all things, which was fun. But having said all that, I've also known and studied the cannabis space for a long time now. It was one of my first sectors when I was coming up in Wall Street. So, you know, I've wanted to do kind of a picks and shovels type story covering in the cannabis space, especially right now with how everything is going. So I say all that to then get to our first question here, because people are they don't want to hear me talking more. Let's talk POSaBIT. So, you know, to start us off, Ryan, what would you say is that one line that best describes POSaBIT?
Wow, the one-liner would be POSaBIT's the payments infrastructure leader in the cannabis industry. How's that?
Beautiful. I actually had a line written out for you if you needed it. It was a payments and point of sale provider for the cannabis. But there you go. Perfect.
And the reason I say is payments infrastructure. We always think of payments infrastructure as that's the core. Like whenever you look at a lot of the successful businesses in the fintech space, you can pick Square, Toast, whoever you want to go. Everything always starts around that core of payments because that's where that's where the money is, right? Transactional businesses are where the money is. And then so we felt like it's really important to lead with, hey, we're a payments infrastructure company. And that is at our core. And then around that, yeah, we do have a great point of sale, but I think of a point of sale as just part of that payments infrastructure. It's not the key part. The key part is you got to have that payments foundation, and then you start building things. And if you look at Stripe, Square, all of them, Toast, this is exactly what they did, right? Fund their business, get the payments going, then they start to build all these services around. They have these great POSs, they have mobile capabilities, then they start offering bill pay and all these other things. And so, yeah, from day one, the way we differentiated ourselves from everyone else in this cannabis tech space is that we took on what I think was the hardest challenge, which was payments in a federally illegal environment of cannabis being a Schedule I drug. And so I figured, hey, why not just go for it? Take on the biggest problem. If we can solve that, then I think we have a pretty good business here. So yeah, that's the key on the one-liner.
I appreciate that. And actually, you already hit in my next question a little bit when, because, for those that aren't as familiar, I'm sure it would be, we should give them a little bit of perspective on the history of the company. As you said, you wanted to take on the hardest problem in payments out there, providing a payment solution for a product that's still federally illegal. So love to, take us back to the company's originally founding and the original thesis for it.
Yeah. I mean, there's two kind of key events leading up to actually founding POSaBIT in 2015. The first is I was at Microsoft a long time. And so, love being in software, love providing great scalable solutions. So, a lot of us that were Microsoft early days and then spun out and started to create our own companies. And so first was just having that experience at Microsoft. Second was I started my first fintech company before POSaBIT as my first startup. And that was to help small businesses be able to book online. And that's where I learned a lot about the challenges of just the entire fintech space and the payments infrastructure. So when it came time to kind of figure out, okay, what's my next thing after my first startup, I started to look around and realize, number one, I lived in the state of Washington, which we had just legalized in 2012. And so this is 2014, only 2 years later, and we just started selling recreationally. So pretty fascinated by the industry. Second, I knew that it needed to have good software. I actually went to one of the early days cannabis shows here in Seattle, and it wasn't even at a conference. It was, and this was weird, and maybe your audience appreciates this or not, but like I'm going to all these Microsoft conferences where it's like way different than you go to a cannabis conference in 2014. A little bit of a shocker. But anyways, walking around the floor, realizing number one, no one's thinking about software. So that was like idea number one. Hey, we got to do something for this industry. They need really good software. Number two, recognizing that it was cash only and couldn't believe that. And I was like, how can you create this, multi-billion-dollar industry and have it all be cash? That can't be good for anybody. I actually was dabbling on a project with my son on crypto at the time. And we had actually bought a couple bit miners, and I was running them at my house, mining Bitcoin. And so it was kind of all of that coming together, which in the very beginning of 2015, a good friend of mine, we're sitting around his backyard and we're like, hey, this is pretty cool. Like there's not many people doing, like you said, picks and shovels kind of software in cannabis. We're in one of the states, the second state after Colorado. So really early advantage for us. And I think we have a cool kind of way to solve this cash problem using crypto. So the company that, we founded POSaBIT, the bit is truly Bitcoin. I mean, when we named the company, it was around point of sale. That's the POS, point of sale via Bitcoin. So we were making sales via Bitcoin. Anyways, so that was the early on of, hey, let's go solve this super hard problem. And not only let's solve it for cannabis, but hey, why not throw in crypto? Because
I mean, why not throw a little AI? Should we throw a little AI, a little psychedelics in there too? I mean, what is there a mining component we can throw in there as well? I mean, come on, we got to hit them all.
Yeah, it's funny. And then, I joke about like, man, those early days were painful because we had to become a money services business. We had to get our money transmission license. We went through so much. I mean, and it, not to go too deep here, but that's really where we learned the importance of compliance. And I mean, it's really the foundation of our company was built on solvent payments and doing it in a compliant manner. And, from day one, we had to hire really good attorneys to build out our AML program and get all of our registrations for FinCEN. And yeah, I mean, we learned a lot early days about the importance of compliance. So
absolutely,
those were kind of the beginnings of the company.
Absolutely. So catch us up then, from the humble beginnings in 2014, where you're going to accept, helping these companies accept payment for their goods and services using Bitcoin or some other crypto way to where we are today in 2023. I'm assuming I'm sure some of that lasted a little bit, but I'm sure the company evolved even since then.
Oh yeah, company involved a lot. I mean, the piece that stayed on was what I just said, the compliance element, of course. But no, we moved away from crypto. We actually went from Bitcoin to Litecoin just because we were paying so much in our fees because we were writing transactions with blockchain. Cool technology, like really cool. And jokingly, I say like we were one of the earlier days of just like true commerce with crypto. But recognize that, number one, it was a very complicated sale. It's really hard to explain to somebody coming into a cannabis store that you're there to buy, a pre-roll, but first we're going to sell you crypto, and then you're going to use that same crypto to buy the cannabis, and honestly, immediately a cannabis store, right? that's not necessarily
just lost that sale for sure.
Yeah. So anyway, that's
you might as well go to my dealer, man. Like I give them cash.
Exactly. So we recognized that, okay, well, that was a good first start. We had to evolve our payments. So that's when we started looking for a debit solution. We started playing around with this point of banking stuff, but recognized right away that was not compliant. And again, goes back to our roots of we have to be compliant. So then that's when we started to really nurture relationships with brand new sponsor banks, and we'll get into kind of how we do the debit. But so we evolved to offering full debit, and then we added a point of sale at the end of 2018, and then we just kind of kept growing. So now, fast forward, here we are, we're over in 650 locations, 27 different states. Our POS business is thriving. We have 40% of the market here in the state of Washington as our largest market. So a lot of really good things. And then obviously, you mentioned at the beginning that we went public. We went public in April of 2019, and that's been a journey as well. But all kinds of things I'm sure we can talk about here next. But yeah, no, fast forward, that's where we are. Healthy company. We're valued about 100 million, I think somewhere right around there. And company's about 80 people based in the Seattle area. And our two beachhead products of point of sale and payments.
Very cool. All right. So I want to talk about the tech specifically, because I think folks want to understand, like, all right, well, what was the actual solution now for these companies that, have to be, for the most part, cash, so can you tell us a little bit about the technology, and also what is unique and different about it compared to, some of the Stripes and some of these other payment systems where I'm sure one risk factor that's in the back of some people's heads, like, okay, well, once this becomes federally legal, like what's stopping a Stripe or one of them now getting into it? So can we cover all that?
Yeah, definitely. Let's start at just how we
I threw a lot at you. I apologize.
No, it's okay. No, it's all good, man. So the key, and so it's a Schedule I drug. If you read Visa MasterCard policy, it basically says within their card brand rules, you can't provide services for Schedule I drugs. So that's thus why you can't use a credit card to purchase cannabis. So we looked at that and said, okay, well, what if we were to build, in essence, an independent network that was a sponsor bank that was willing to basically be a sponsor for our processing. Number two, find a processor that was willing to process debit transactions. But the key is on independent rails. So there's the way a card works. When you go to the gas station, you pay with a debit card. If you look on the back of your card, they used to have these symbols, star, plus, all these little logos. Those are all different independent rail providers. And so based on wherever you got your debit card, your bank that issued that card basically has a stair step of, okay, when Bob runs his debit, first, run across the pulse rails to try to find his bank. Can you find his bank to find how much money he has in it? Nope, we can't. Okay, so then go to the next one. Okay, so then it goes, let's say, to the Star network, runs across that. All of those, quote, rails are called independent or rail providers. Some are owned by Visa and MasterCard, some are not. So what we did is we run on the ones that aren't owned, which then allows us to be independent and run across the independent rail providers that are separate from Visa and MasterCard. So now you have a processor that's willing to process, you have a sponsor bank that's willing to be our sponsor, and you have independent rails. So that's how the solution works. Now, doing all of that takes a year and a half at least. Like, it's a very complicated process because from just a compliance standpoint, and you have to find the right partners. So it took a lot of time. And I always tell people that's really our moat around our business. Until legalization happens, it's very difficult to repeat all of what I just said. And do it in a way that, we've done from the beginning around compliance. And, I tell people this because it's kind of a badge of honor. We got audited by FinCEN. I don't think anyone wants to get audited by FinCEN, but we actually got audited by FinCEN about a year and a half ago, and we passed that audit with 0 issues. So, it was almost a testament of all of the work we had started back in 2014 to allow us to finally get to this place where we have this compliant debit solution. So that's why it is what it is, and why we've built a nice moat around it. And people ask me, like, why aren't people just rushing into this? Well, it's just hard. It's really, really hard. And the compliance piece, like you said, Toast, Square, I mean, everything around this is a much different transaction than buying a cup of coffee. And so every single transaction has to be registered with the state that you're in. We have to file what we call SARs, or suspicious activity reports, every single month on every single transaction, and it actually depicts where the store. So imagine I'm sending to FinCEN all of these cannabis locations and all these transactions, again, totally above the board on everything we do around compliance. That's why it's unfortunate that there's a lot of really bad actors in this industry, and I'd love to talk about that maybe later on. But so to end the question on what you said around, Square, with competition coming in, and if legalization happens, certainly Square and others will eventually come in. I mean, it's a big enough industry, but initially our speculation is they probably won't jump in immediately. They've got to figure a lot of stuff out. And if they do jump in, they probably are going to jump in via an acquisition. So, our strategy and our exit has always been, heads down, execute, be as successful as we can on the public markets, and, obviously drive the valuation and shareholder value. But if and when that day comes that things legalize, let us be the best target. Let a Square or a Toast or a Stripe zero in on us and go, all right, those POSaBIT guys have been doing this a long time. They know how to do it. They've been doing it in a compliant manner. Let's just acquire them. So a lot there, but I'll let you kind of go.
That makes total sense. As you were saying, I was like, oh, duh. Obviously, that makes total sense. Just let's jump to that regulatory question real quick. I mean, we can speculate all we want in terms of all that coming down. I mean, but you guys are unique in cannabis where you're not so affected by whether or not it goes off Schedule 1 or not, right? Yep. Like, at the end of the day,
yep.
There's how many states now? 23, 24 states that it is legal and operates. So, we want to speak to that a little bit more because I'm sure that's one of the things that folks think about as well.
No, for sure. And it's a tough one to answer because being in the cannabis industry, of course, we're 100% supportive of legalization. There's all kinds of real benefits of cannabis, and that we value, the research and medical use, all kinds of things. But at the same time, like you said, we're in this kind of unique position. So, we're on the fence of, if it's not fully legalized, it's a much smaller pool of competitors, and we're the big fish in a smaller pool. And it's kind of nice, right? I mean, just look at our track record. We double revenue last 5 years in a row. Like, if we're on a great path to just continue and down there. Now, if it does legalize, it's not a doomsday for us, because we recognize right away that if it's legal, all transactions will start to be on card. Like today, if you look at my business today, and you probably heard me say this if you listen to me, like we only process about 30% of the transactions, even when we're in a store. So people still are paying with cash. There's still 70%. And a lot of the reasons is the stores, like, they don't mind the cash. They have their ATMs, they don't mind the cash. Now imagine a world where it's fully legal. It's going to be like any other retail. So you're going to get to the upper 80s, maybe even low 90s of all transactions are going to go to credit and debit. So good news for us, we're already pre-approved for credit. So when that day comes, it's literally the flipping of a switch. Now we're taking credit. Our volumes go from 30 to 90. So we're tripling the amount that we're processing. Yes, there'll be competitive pressures. Yes, our rates will go down a little bit because we'll have to. But when we model this out, the net is the volume increase and just the sheer number of stores now that are opened up. Instead of having 10,000 cannabis stores today in those states that you mentioned, now you're talking, 50, 60, 70, 100,000 different stores in the US. So, your TAM goes way up, the processing volume goes way up. Yeah, competitive pressures come in, but we feel great about where we end up in a post-legalization world too. So we're happy in both worlds right now. We're kind of playing both sides right now, just saying, hey, we love where we're at because we have a really great solution and it helps a ton of people that are in this space today while it's still not federally legal. Mm-hmm. But going to be okay when it becomes federally legal.
I mean, if you game it out a little bit in some respects, you're like, oh man, it's not legal yet. Like, right. Bummer, because and you're in the back of your head, you're just like, wait, but there's other states that are coming online soon. And like, hey, sales team, go.
Yeah. Go. Yeah.
Get over there.
And market penetration. I mean, I look at the state of Washington. If we go back 3 years ago, we had maybe 5% of the market. Now we have 40% of the market. So even in those states that are legal, we're still taking share, right? It's an interesting space to be. Safe banking, is kind of, my board and I have this joke because I've been out there saying, I don't think it's going to pass. And I've said this for years and years and years. And even now it's kind of risen again. Oh, it's going to come back. And the joke I always say to my board is like, hey, when pigs fly, safe banking will pass. Like, it's just, I don't see it. We have such a split political division right now in our country and the economy, everything else like that. I just don't feel like safe banking is going to be the thing that just like jumps to the front for everybody to want to pass. If it does, hey, that's great. But I just don't see it happening.
Absolutely. So let's talk also real quick about, just the industry in general. Again, we were joking. I don't want to joke about it because, there's a lot of businesses have been hurt by this, but like cannabis industry it's been a bloodbath. What else can we say? It's been an absolute bloodbath for what would you say, last 18, 24 months?
18 months. Yeah.
Yep. What would you say are some of the reasons for that in your opinion? And then, how are you managing through this difficult period in cannabis right now?
Yeah. So industry as a whole, 100%. I mean, I think a big part of it is there was a surplus. I mean, a lot of operators came in, the MSOs started to really become vertically integrated and growing a ton of their own. So there was some price compression on just the amount of product in the market. So I think it all, sometimes people look at like, oh, it was the economy, and some of it was self-inflicted. I think the cannabis industry, it was a bit of a self-infliction where it kind of grew up a little too fast on the grow side and produced way too much product, and there wasn't enough demand, supply and demand, basic economics. Like, it was too much product. So you had the big guys that grew all these products now are starting to hurt a little bit more. So it's like anything, when the big start to hurt, what happens? It just rolls its way down. And so you started to see price compression at the dispensaries and the stores, having to really, not their margins are, started to drop. And in addition to 1080E and all the taxes they had, now they had margin pressure. So that started to drop. And then you just layer on the economy and just general consumer spend. And for the first if you say I think it's about 18 months, 24 months. The first 6 months prior to that, the economy was going down, but cannabis was staying relatively okay. And I think it's because it's like anything, those sin products, or whatever you want to call it, alcohol, tobacco, cannabis, even in tough times, people still spent. And I think we had this artificial time period where people still were spending, but things were hurting. And then finally we reached the peak where it's like, oh, okay, now actually consumers really are holding back. And we've been, we saw ticket sizes that were normally $86 drop down to like $72, in some cases $60. Like there's literally we've seen it. So we know consumers are spending less. We know there's a surplus of product, which is causing margins to be squeezed. So that's the industry's whole beauty about our business, is that in some ways, we are affected because we're payments. So we don't process maybe as much per store, but we're not as affected in that we have, it's you said picks and shovels. It's software. Software industry is a great place to be. Software is good margins. Everyone still needs our point of sale. They have to have our point of sale to register, to stay compliant. Consumers still want to pay with plastic versus paying more fees at an ATM, or, frankly, just having not enough cash on hand. So it's good that, our services, in some ways, I don't want to say they're inflation resistant or recession resistant. Like we're still affected, but not nearly as much as the rest of the industry. And so I think what's happening, and we've already saw this, Q1 in general is down. Q2 numbers are looking better, not only for us, but also for the industry as a whole. I think, when you have these brand new industries that get created overnight, multi-billion, they're going to go through a bunch of peaks and valleys. And I think we're just, we shot up, and we're in our first big valley of cannabis. We'll come out of it just fine. And, when the economy starts getting a little bit better, I think we're naturally going to come out of it and be even stronger. And so I think it got hurt because there was artificial inflation on valuations too. That was the other thing, is like it's like AI today. I mean, you and I both, you put .ai on your domain right now, and you're going to get this crazy valuation. I guarantee in 2 years from now, we're going to be saying, man, what happened to the AI industry? Like it's, I think these are these way these industries work. There's a lot of momentum, investor excitement of like, oh, cannabis, it's going legal. Yay. A lot of investors come in, a lot of new companies come in, and it goes up, and those valuations are artificial. And the companies that survive are the ones that, frankly, have a good business model and have proven that even in tough times, they can be fiscally responsible. They can still grow their revenue. And that's what, not to just toot our own horn here, but like that is one of the things we pride ourselves on. Like, hey, this industry's been up and down, but we've been consistently growing, consistently getting better and more customers and growing. And I think hopefully investors, will reward some of the companies that have good unit economics and have run their companies responsible and haven't done stupid public and private valuations. Like, it's just, so anyway, a lot there, but I'll get off.
No.
Right now.
No. You hit on a lot of what has been kind of the general, reasonings for what's going on in the cannabis industry. And I think that everybody pretty much agrees, like that's what's been happening. And, from what's interesting that when I think about or I don't know, maybe I just think it's interesting, but like when I think about POSaBIT in terms of, I guess, or at least for me, what I want to know that I think would be interesting is, what's your current market penetration right now? In terms within the states where, by the way, are you just in US, or you also have clients in Canada? You do just US. Okay. Just US. So for the states that it's currently legal, what is your market penetration right now? And then, let's start there. I want to start there.
Yeah, no. So the general rule right now is there's 10,000 dispensaries out there, and that are actual legal, both recreational and medical dispensaries in the United States. And not all of them obviously have payments today. We guess that about 30% of that point of, the still the non-compliant point of banking, which happy to talk about that, because that's actually, it's unfortunate. having this point of banking out there, because there's a lot of merchants that are vulnerable to that solution not being compliant. But so if you think about it that way, 30, maybe even optimistically, let's say 40%. So now you're talking about 4,000 dispensaries. We've got 650. So, you can do the math. We're 15-ish%, something like that, roughly, getting stronger. In the states like Washington, like I mentioned, we're 40 plus percent. Because we are a West Coast company, we're obviously strongest right now just in the West Coast. So Washington, Oregon, California, Colorado, Nevada, kind of our big states. And then when we leap across the country, Michigan's a really good state for us. We've been very successful. New Mexico, we've been very successful in. And now we're just kind of really opening up in kind of the eastern border, Massachusetts, New Jersey, New York, kind of that area, and in Florida. We'll start to get more market share there. But just, it was just a proximity thing for us. It made sense for us to really focus on the West Coast. Plus, the West Coast states, we're the first to legalize, right? So the more mature states, for us, it's actually better to work in, because it's crazy. These new states, and trying to understand, like New York, right? I mean, New York's absolutely nuts right now. Like you can walk downtown Times Square and you'll see every shop selling cannabis right now. And, it's supposed to be a legal state. Like, it's out of control. So I do look to the state of Washington and frankly, Colorado as like the models of how to really run a good cannabis state. Like, everyone here abides by the rules. Everyone pays their taxes. Compliance is super important. The LCB does spot checks. Like, there is very, there's black markets and everything, but like very little here compared to like a California. Sorry, man, but it's like you guys are one of the worst. But
oh man,
it
sucks.
It's a little crazy now in California, but yeah. So yeah, that's when we look at our share, like that's. And then the other big metric for us is profitability, working to profitability. We've, very much stated like, hey, we have great revenue growth. We want to double. We focus on our gross margin dollars, and we want to be profitable. I mean, I think every time now investors are they're looking at not only that top line growth, but they're like, okay, that's great, but are you going to be able to sustain? Are you actually putting money in the bank? When are you going to be profitable? And so we've touched profitability multiple times in the last like 18 months. But we officially came out with our guidance that we were going to be slightly negative this year. And we just felt like in a time where there's a lot of unknowns, and frankly, we're investing, like we're pedal to the metal, like we're investing right now because we think this is a perfect time for us to take market share. In a time when a lot of our competitors are hurting, this is a great chance for us to gain share. So we don't want to be foolish with our spending, but at the same time, we don't feel like now is the time to put millions of dollars in the bank and, focus on just profitability. We want to focus on some growth right now.
I was going to say that kind of goes right into, some of your capital allocation strategy when you're looking at M&A. I mean, the company has done quite a few, a couple transactions over the last 3 years. And then in April, for instance, you made an acquisition of a company called Hyper. So Can you tell us a little bit about what your M&A strategy is, maybe using Hyper as an example, and how, and maybe some of your criteria for potential acquisitions out there right now?
Yeah, no, great question. First and foremost, we look at how is it going to help us with distribution? So it's, just acquiring existing accounts. So we want to grow fast. Great way to grow fast is buy existing companies that have relationships already. So that's criteria number one. Number two is look at a company that is distressed in value, but has great technology and is aligned with our philosophy, particularly around payments and payments infrastructure. And so what was very appealing for us with Hyper is that, they were raising capital 12 months ago at $100 million valuation. And, they unfortunately ran out of some cash. They were struggling a little bit. They still had great product. They had great people, and they had a good set of merchants. I mean, they had 150 merchants. So when we looked at it, we're like, okay, if we can acquire this asset for what we paid, 7.5 million, only 1.5 million in cash, 6 million in equity. Really good deal for us because they come with 5.4 million of revenue and 150 merchants, which we know we can monetize immediately. And they come with some technology to fill some of our product gaps. And so, that was an example of a perfect fit. It filled product gaps. They brought some experienced people. They were a depressed company, so the value was correct, and they brought merchants. So that's, if you look at, that's our criteria really and we're still in market. Like, we're looking right now at other opportunities where we can kind of, if it hits those criteria, then the nice thing is we have the cash. We're one of the few companies that actually has some cash in the bank that we can still make some of these acquisitions. So, I can dive into Hyper if you want, but, a little bit more. Yeah. So, with Hyper, there was 4 million things we got. We got another processor. So remember when I explained kind of how much time it took us to build this compliance system? One of those was getting a processor that would agree to process for us. They actually had a relationship with another processor. And so the beauty is it gave us redundancy. And so now we're the only payment provider in the entire cannabis space that actually has dual processors. Nobody else has that. So it put us in a leadership position, number one, with that. Number two, it brought us some technology in it's B2C and B2B ACH payments. So think of it as, on the B2B side, think of it as Bill.com. So we now have the capability for our dispensaries to use our technology to pay invoices. So they can, not only can they generate an invoice, but they can actually pay an invoice and move money around. And in an industry where it's really hard to get banked, it seems simple, like we all pay our bills online, but when you're a cannabis company, it's not that simple. So we're providing now a solution that allows them to have, in essence, a bill.com or bill pay experience. So that's a really big thing. The other thing on the B2C side is it opens up another avenue for people to pay for orders online. Because we have a debit solution, you can't pay, obviously, with a debit card online. All transactions have to be in person because you put your PIN in. And from a compliance standpoint, that's like no bueno. You cannot do debit online. So what we built, or what Hyper has, is the B2C ACH capability, where you can actually connect up your checking account. And then if you place an order, you can have that automatically pulled out of your checking account and paid for. So that was a nice product gap that we didn't have. And then the last thing, and I point to team's great, but Michael Sinwell, who was the founder and CEO, is just a wealth of knowledge, been in the payments industry for 30 years. And so, I started this interview with you saying we're the payments infrastructure leader. Like, the way we succeed is hire really good payments talent. And he's a guy that's been in this industry for 30 years, knows a ton about the industry and the payments industry specifically. So it was great, acquisition, talent acquisition too. So that was, kind of the driver behind. The last thing I would say is they have this software called Comply, or we have the software now called Comply. And banks use Hyper Comply for helping them do underwriting decisions for cannabis businesses. So for the banks that are banking the cannabis industry, your credit unions and your state banks, if they're running Comply, it helps them evaluate. It does all like OFAC checks, all the EIN, background, KYC checks on all the applicants. So if I'm a brand new cannabis store, I want to get a bank account through this credit union, and they're using Comply. Comply is the underwriting software that helps the bank evaluate whether to approve them or not. The reason that was important for us is it, number one, just strengthens our belief and what we say over and over, which is we're the compliance company. Like, we really invest in compliance. But number two, it gave us all those banking relationships, because now when we establish those relationships with those banks, we can say, oh, and by the way, we've got a great payments system that's compliant. We've got a great POS. So now you've just opened up your channel, and a bunch of our banks are our best sales reps that refer us tons of clients, because your brand new cannabis store, first thing you do, get a bank account. What's next? Oh, how do I use payments, merchant services? Oh, well, there's this great company we work with, POSaBIT. So yeah, that's been our model, and it's worked really well. And it was another reason why we were excited to get Comply as part of the Hyper acquisition.
Awesome. And you brought up this phrase point of bank. Is that where this component, this acquisition also fits what you see as a huge risk factor for a lot of these merchants out there?
Yeah, so point of banking is digitally, it's like a digital ATM, and it's been the payments mechanism that's been in the industry for the longest. It's not compliant. There was a Visa memo that came out in December of 2021, and it's out there. Forbes wrote an article about it and everything. Basically, it simulates an ATM. So you walk up to a Cannabis and you pick out, a handful of edibles, whatever, and let's say the total $65. It rolls up to 80 and it charges you like you're taking out $80 out of a cash machine. Well, the reality is you're not. You're paying for cannabis and you're getting $15 in change. And that is not a compliant service that Visa and MasterCard support. And so unfortunately, there was a lot of people in this industry still are doing that. And if you go into a cannabis store and they say, yeah, you can use debit, and they charge you $60 on a $50 transaction, then you're using a non-compliant solution, because that is not how it works. Like, our solution is to the penny. It's a true debit transaction. And so, yeah, I'll take just another minute. Just, there's a lot of bad actors, and in going back to your question about the industry, the frustrating part about cannabis getting hit so hard is there are some negative outcomes, in addition just to obviously the financial piece of it, is that it brought out a lot of non-compliant solutions, and it also made a lot of the stores become desperate, right? In desperate times, sometimes people do desperate things. And so what you had now is you had a lot of people representing that, hey, we take credit, so why don't you sign up for us? We take credit. And all they're doing is they're lying about what the transaction is. They're putting a false address of your business, and you literally are processing credit. And I go into cannabis stores sometimes and I'll be like, hey, can I use my debit card here? And they're like, no, but you can use credit. And I'm like, really? Okay. And then I start to educate them. I'm like, by the way, if you get caught, you number one, could have all of your funds held. Number two, you could be put on the match list, which means you're banned from using any processing for 7 years. And you're susceptible up to $250,000 in fines from Visa. But again, desperate times, some of these dispensaries, unfortunately, are trying out these non-compliant solutions. So it's a bit of it's sad.
Or just going full cash, because they, all the tax incentives. Yeah.
So we were on this great, like, okay, we're coming out, we're becoming a mature industry, we're starting to really value compliance. And then all of a sudden, because of the economy and how bad cannabis was hit, it almost feels like we took a step backwards. And people are like, oh, okay, I just got to survive. Like, I just want to be here in a year. So it's unfortunate, but I always warn our stores, because I get it all the time. Even on existing stores, they'll call me and they'll be like, hey, Ryan, I had this guy come in and says, we can take credit now. And I'm like, no. So anyways,
I was going to say, I mean, is that your biggest risk? Like, just when you're thinking short term right now, in terms of like, potentially winning new business and just within the current landscape of what's going on, it seems like you're not so much worried about your competitors out there, because it seems like you have the market penetration. Like, it seems like they all know who you are, but now it's just more like these dispensaries think themselves like, well, I could do payments or I could just do cash, especially when you're in California, right? Like, taxes here are crazy, I mean, you don't blame dispensaries probably being like, hey,
no, I know.
Appreciate you, Ryan, but I'm going to cash right now because it is ridiculous here.
Yes. No, it's a very common conversation. It's like, hey, I respect what you guys do. I know it's the right solution. I know it's compliant, but it's costing me $5,000 a month. And it's like, I can't afford $5,000. And by the way, with all, like you said, the taxes, if I have my own ATM, and again, not a good practice, but they take that cash, they cycle it in that ATM. That's just cycling cash, right? I mean, and unfortunately, a lot of times that isn't necessarily disclosed. And so it's not taxed. And it's just, I don't know. There's the point of, just in general integrity and all that stuff that you have, it's just a tough space, man. There's this industry, it's gone, there's really smart businessmen and women that are running great stores. And you look at them like, wow, they really, but then there's also a lot of people that, got into this industry. They were growing, maybe this, I don't want to stereotype, but it's like growing in my garage. It became legal. I'm like, hey, I'll start a store. That sounds kind of cool. But they don't necessarily know everything about business. They know a lot about the product. But when, you go through the times they're going through now, it's less about the product. It's more about, hey, can I sustain this business? And so, unfortunately, at least a third, I would say, of our industry today is people that are just trying to figure out how to survive.
Yeah. I was going to say, I mean, like, do you help some of these companies with some of that I mean, because you look at I mean, using California, you look at MedMen, they're just burning through cash hand over. I mean, they've been doing it for years now, right? But, I mean, is there certain best practices that some of these stores can have in order to make sure, like, hey, you do that, like, well, one, you need to have the payment side process because it opens up the doors where you're not just cash only business. Now you're allowing customers to have multiple ways in which to pay for goods. But yeah, I mean, do you guys have, I don't know if it's a service you sell, but I mean, have you been doing some kind of thought leadership to help them?
Yeah, we don't sell it, but we do have a bunch of case studies that we like to just educate the stores on. I mean, I think there's a couple of things. One is, if you are cash only and you truly are reporting all of your cash and being taxed on it, and you're having armored car pickup services and you're paying your accountant to count it, and you probably have some miscounts and some theft because it's cash. The cost of cash is anywhere between 6.5% and 9%. And a lot of people don't realize that at the end of the day, when you're actually paying for managing cash, it's actually more expensive than electronic transactions. Electronic transactions, while you might be paying 3.5%, you don't pay that armored car pickup. You have 100% accurate records of every deposit and every transaction because it is electronic. You don't have theft, and it's a much safer environment too, because your bud tenders aren't dealing with massive cash drawers, and safety is a huge part of this too. So I think it's having that conversation with the right owner to educate them on, hey, here's the difference between cash and taking plastic. Here's why, number one, you're creating a better environment for your customers, a safer environment for your workers. And in general, while it's hard to get your head around it, you're actually going to make more money in a digital transaction than you are with cash because of that potential loss of all of those disadvantages of cash. And the thing I always say, and if you walked into the grocery store, let's say, and you went to the cash machine and you pulled out $40 and then you did your shopping, you're now limited by that $40. So, you're walking to the store and you realize, like, oh, wow, like, beer's on special. Maybe I'll buy more, right? You can't, right? You can't. You're limited. And I use that same analogy with the store owners. Like, if you go to a store that has an ATM, they come in the corner, they pull out $40, and then they begin their shopping. So you've just limited your sale capability. Your bud tender cannot sell that person above $40 because that's all they have. Imagine a world now where you have plastic. It doesn't matter. Like, you get up to the counter and you're like, oh yeah, it's a long weekend, I forgot. Oh, or gummies are on special or whatever. Like, now my bud tender is engaged in a great conversation. They're upselling me on my favorites. And I'm like, sure, I'll do that. So now I spend $70-$80 instead of the 40. So you just have to it takes time. You got to have that conversation with the owners and make them really understand that there truly are more benefits to having a digital transaction than having cash.
For sure. Another question I have, being how the industry is going through tough times. I mean, from a business perspective, do you work with some of the dispensaries on, their what they pay POSaBIT in order to have their services? Like, yeah. Is it a base fee, a flat fee per month, or do you also have some structures where it's like on a transaction basis?
No, good question. I should have touched on earlier. So our basic revenue model, and it's good for investors to understand, is we have our point of sale, which is a SaaS-based model. So it's just a monthly fee. We charge anywhere between $169 to $200 per terminal. So average store has 5 terminals. Let's say you're paying $200 per terminal. It's $1,000 of reoccurring revenue every month for us. And those are usually our multi-year deals. So those are great, right? That's kind of our reoccurring revenue. Then we have our transactional revenue, which is obviously from the payment side. And what we charge there is we charge the consumer a small fee. Some stores, that fee gets pretty low because we like to not have hurdles, but it can be as low as $2, as high as maybe $3.50. And then we charge the merchant a processing fee somewhere around 3 to 3.5%. So on a $100 transaction, if we're charging the customer, let's say $2.50 and the merchant $3.50, I mean, that's $6 of top line revenue for us on $100, which is great. Like, so that's why we've been able to grow our revenue pretty good, is because it's a pretty good model to be in today. As stores as stores grow and their processing grows and we want to keep them happy, we will negotiate and give them volume discounts. And so hey, you guys have been a great customer. You've been paying 3.5%. We're going to drop your rate to 3.25 if you sign a 2-year extension or whatever. Like, so right now we're in that model of trying to make sure we're sustaining our revenue growth and that same store revenue year over year growth that we want. And one way to do that is just locking them in a little bit longer contracts. So that helps us forecast out our pro forma and feel more comfortable than, because it goes back to your question a while ago about when legalization happens and competition comes in. I mean, I'd much rather have a couple-year contract, where people are using our payments and, it goes legal and they're like, yeah, but Square, yeah, but, and I'm like, yeah, but, we've got all these great services for you already, and they're fully compliant. And you, by the way, you signed a 2-year contract. So, yeah.
Very good. One last question I have on M&A acquisition side of things, because I pulled up the full year 2022 financials, and I saw company had at that time, and you've reported Q1 since then. But can you give us your current cash amount? And what does that like ideal size look like, right? I'm sure it's some combo of cash and stock, but like you got cash, but it's not like you have a ton of cash to go and make like a ton of big acquisitions, but like to get a little better idea there.
Well, and I'll start with saying we do really value our equity, especially in these down markets where our company was over $200 million not too long ago, and now it's in half. And so like we don't want to just give a ton of equity away when we believe that we're certainly valued much higher than what we're trading at today. And so it's always going to be a combo for us when we acquire. It's going to be a little bit of cash and a little bit of equity. In some cases, maybe more of one or the other. But for us, obviously, we want to make sure we have enough capital in the bank for sustained operations of our current team. So we look out, over 18 months of payroll and everything else. Like, okay, we're in good shape there. One of the things we announced when we did acquire Hyper is that we have a line of credit that we've drawn now we drew $6 million on $11 million. So we still have $5 million sitting out there in the line of credit that is ours if we want to take it. And then we have cash in the bank, and I think we're at like 7 million or something like that So, we have cash, but we don't have stupid cash. Like we're not going to go we're making acquisitions that are going to be a little bit smaller in nature, that, like I said, a chunk of merchants, a little bit of a technology, probably gap to fill, but it's not, these are not hundreds of millions of dollar kind of acquisitions at this point. Now, eventually, maybe we'll get there. This is part of the whole roll up right now. I mean, you're seeing this across the cannabis tech industry right now. And, at the end of the day, I think it's an important point for just your listeners is that if you look at the cannabis tech space, software space, you're looking at an industry that 12 months ago probably had, you can almost name like 30 kind of reasonable players. At the end of this year, it's going to be down to like 10. Like it's like there's that much, we've already seen BioTrack get acquired, right? Akerna get acquired. We've made acquisitions. Like it's Weed Maps traded, obviously Leafly traded, NASDAQ, and then you really have POSaBIT, you have Dutchie, and then probably Blaze, Trees, and Jane. Like those are the 8, I guess, or 7 that I just said that I feel like are the software companies that I feel like are going to be around in 12 months. Like I just think there's a lot of consolidation that's still going to happen. And then unfortunately, there's just gonna be a lot of companies that just go out of business and they just don't get bought because there's nothing there to buy.
And you named a couple of them that I know aren't in the payments POS space either. So I mean,
exactly, which makes it really hard, right?
Wow.
And yeah, so it's a cool, really cool space to be in. It's super challenging. I mean, I thought when I worked at Microsoft for 17 years that was hard, and now I realize that was my honeymoon period. Like that was easy. it's like, man, I tell you, I did not know what it's funny, I was probably super arrogant coming out of Microsoft, and I'm like, oh yeah, this is going to be easy. And it's
cannabis, chill. Man. This is gonna be so stuff's gonna be legal in a couple of years. No worries, man.
I know.
Easy.
Yeah,
that's funny.
It's been super fun though. I will say that. I mean, I always tell people I'm having more fun today than I ever have in my entire career, because there's never a dull moment, man. We have a great team. We have great products. The industry is, even though it's challenging, it's really fun. And it's cool to be in an industry too it's really growing, and we know it's not going anywhere. Like it's just going to get bigger. I mean, that's the thing. Like, so while investors are frustrated, everyone will tell you cannabis isn't going away. It's just going to get bigger. So 100%. We're going through a little bit of a hiccup, but
so Ryan, before I let you go, I got two more questions, because we hit on most of, in terms of like downside risk factors. I mean, it's almost like it goes without saying, almost in many respects, you're in a very growthy sector. But my two questions, I think we covered almost everything, but I mean, like I said, you've done kind of the dog and pony show, been out there doing one-on-ones, conferences, everything like that. What would you say have been some of the more recent frequently asked questions you've gotten? Maybe we can answer them here, or what do people still get confused about when they think of POSaBIT?
Yeah. Honestly, the number one question I get, and it's easy, is, hey, POSaBIT, you guys, great story. You've doubled your revenue for 5 years. Like, why is your stock not moving? I mean, I have so many investors that have asked me that question, and I'm like, wish I knew. Like, I wish I knew. Like, we're in a weird space. And you said you talked to Lewis, right? Cammy, and he was one of the first ones that said this to me when I got him on the board. He's like, I've never seen an industry like this. This is weird. Like, you can look on paper at POSaBIT and you're like, this company shouldn't be worth this. It should be worth 3 times this. Like, you guys are doing everything you knew, but yet the stock is just, we'll make a huge announcement and the stock will go down, but then we'll do nothing and the stock will go up. Like, it's a very interesting market. So that's the number one question I get, is just like, hey, what's up with the value? Like, POSaBIT should be valued more. I'm like, yeah, it should be valued more. What we're doing, we're putting our head down, we're executing. And that's, hey, the market's going to be the market. We know it's going to recover. We know we're going to come out looking great at the end of the day. But hey, I already lost all my hair worrying about our stock price. So that's one question. The other question is, and you already asked me, which is, hey, what happens when legalization happens? How is POSaBIT going to, what's the competition going to be like? And I say the exact thing I said to you, which is, hey, we're going to be great. Like, don't worry about POSaBIT post legalization. Like, we're going to be super healthy, and not only are we going to be super healthy, but we're probably going to get taken out, and you're going to get a nice payout. So there's no like shying away or don't worry about legalization. That's okay. We're going to be okay. So those are probably the 2 biggest questions I get.
Perfect. All right. So my final question for you here, and it's kind of interesting because it's really, it's 2 paths, right? It's because the base question is, in your opinion, where do you want to see the company in 3 to 5 years? And what would you say are the inflection points that'll get you there? But you really got to answer in 2 ways. It's like, okay, if legalization, if not legalization, right? So if legalization, it's, well, there's this. So I'd love to hear you say both paths in that case.
Okay. So in a non-legalization, I think and let's just say that, and I don't think legalization number is going to happen. Like, full legalization, I don't think happens in the next 5 years. It's going to be more than 5 years. So I'll just say, in the next 5 years, our goal is to continue to grow our processing. And, we're going to be getting real close to processing $1 billion this year. But I think a really great inflection point for us is going to be actually, and it's weird, it's the 2 billion mark. The 2 billion mark for us represents, just from a market share standpoint, a significant, it's almost like that train is up and over the mountain. Like once you get to that 2 billion mark, the momentum is going to be super hard to stop us. So we've had great traction as we're building up to 1 billion, but for us, in the next 18 months is to get to 2 billion. Like that absolutely is a goal. And I think once we're there, it just solidifies us, and it'd be really hard for competition. It just puts us in a really unique position. With the legalization, I mean, honestly, I think it's going to come down to, do we have a big enough market share that we can protect our current base? And so I look at that and I go, okay, our point of sale, because a point of sale is very sticky. It's the core of the business. A payment sale is just transactional. It's where the money is, but it's really that point of sale that manages your inventory. It manages your people. It manages, all your ordering and inventory and everything. So that we need to have at least, my metric I always say is 2,000. I'd like to have 2,000 merchants on the point of sale, because then when legalization happens, it's really hard to displace, because that point of sale is really entrenched. And you also become extremely attractive as an acquisition. There's a nucleus of 2,000 or more merchants in this space, kind of is the magic number for me on that. So it's really 2 billion in processing and 2,000 in point of sale merchants. Those are the two. And the don't legalize, it's more important on the processing side. On the legalization, it's definitely more important on the point of sale side, because it's a much more sticky product.
Very cool. All right, Ryan, I think we're pretty much. Did I miss anything? What do you did I miss anything? I think we covered everything.
We covered a lot, man, and it's no, I appreciate it. It's like I said, it's been a fun space to be in. I think the best is still to come with POSaBIT. I mean, we're 8 years into this thing, but the last, it's like anything, the last 2 years have been drastically different than the first 6 years. Like we're really growing at a fast pace. Our technology is taking off, and we have some interesting, we're on the CSE and we're on the OTC, but we're exploring the NASDAQ pretty hard right now, and we're exploring the big board up in TSX too. So we believe there is a path that gets us there, and that is going to be really healthy for us and for our investors if we can get there. So look out for more from us on that coming up. But no, that's definitely on our agenda, is to get on the big board.
Absolutely. And you've publicly talked about that?
Yes.
Okay, good. Just making compliance, making sure.
Cool. No, exclusive to you.
Breaking news.
On the podcast today.
Oh man, Ryan, that's good stuff, dude. Well, listen, man, thank you so much for joining me today. Really do appreciate it. Good luck. Stay safe. I really look forward to our next update.
Sounds great. Appreciate the time, and thank you all for listening too.
Absolutely. And Ryan, real quick, I forgot to ask you, where can our audience go and find more information on POSaBIT?
Well, you can go to POSaBIT.com. It's POSABIT.com, and we have an investor page there, and click on the link to subscribe if you want. You'll get all of our investor updates awesome. As well. So yeah, thanks for the plug.
Awesome. Thank you, man. This podcast is for informational purposes only and is not provided as financial, legal, or any other advice. The information is not investment advice or an offer to buy or sell any securities or make any investment. The views expressed by guest speakers are their own, and any reference to third-party products, services, or information does not constitute an endorsement thereof by SNN or its affiliates. SNN expressly disclaims all liability for any individual's use of the information presented in this podcast.